Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I am Dadia. One company that has been in focus over the last couple of trading sessions is NIIT, and it clearly seems to be embarking on India's growth story with various sectors that are evolving. The importance of skilling that is being recognized as well, and that's what is NIIT looking out for. Joining us on the show to discuss more is Vijay Thadani, Vice Chairman and Managing Director at NIIT. Vijay, good afternoon and welcome to the show.
Thank you very much. Nice to be here.
Always a pleasure to speak to you. Vijay, my first question coming to you is, overall, clearly, there has been a lull with regards to where IT as a space goes in the job market, but a lot of new sectors are evolving where skill is absolutely needed in the job market. What is the strategy that NIIT is embarking on?
Okay. So thanks for having me here, first of all. And I would respond to this in a couple of parts. So first, as you said, there is a lull in hiring. And that's a temporary one because I think last year there was a euphoria in which I think the hiring exceeded what people thought that they would end up needing. And that is getting balanced. So that's a temporary phenomenon, first of all. And I think we will be back on that growth story of the country. And you are beginning to see signs of that. Second, I think we look at the whole IT sector as large global systems integrators. But there is the next tier of global systems integrators who are at this point of time also very buoyant and very optimistic. And I think we are seeing some traction which is building up there. So what this has helped us do is expand our customer base quite substantially in the last few months. Now talking about the other sectors, there are other sectors of which the banking, financial services, and insurance is been a very promising one. We've been in this sector for the last 15 years and have a very strong position. And what we are noticing is that at this point of time, the need to skill, upskill, and reskill, which means get newcomers, those who are fresher, those who are working, upskill them, or there are others who need to reskill them. I think that part is happening very well in BFSI, and we are seeing traction there. There are other sectors which are opening up. For example, the whole thrust on manufacturing in the country, that is leading to new age manufacturing. And many of these jobs, actually all these sectors, one thing common in them is there is a huge dose of technology in just about anything and everything that we do. And given the fact that we have been strong in technology and given that we have a global footprint where we work with large multinationals and look after their training needs, I think we are a natural contenders to get into these new markets. So that's the other thing, whether it is new age manufacturing, whether it is design, whether it is engineering R&D, whether it is supply chain logistics. I think these are sectors which will be booming. The scene behind that is very simple. We had 9.5 million graduates graduating last year, and that is at 27% gross enrollment ratio. Gross enrollment ratio is going to grow up to 50% in the next 10, 15 years. In that case, the number of graduates, it's safe to assume, will double. The question is, all these have to get right skilled and day one, R1 ready to get into the new jobs in new sectors which are coming. So I think all these are contributors to the growth momentum that we foresee in future.
Right. That's an interesting thing overall. Now, when you mentioned that the lull in terms of IT as a sector is temporary, which are the internal segments and programs that you're expecting a pickup in? And what is that kind of investments NIIT is making to actually upskill and skill maybe students or working professionals in those segments?
So, first of all, we have always been forerunners in understanding the emerging trends in technology and getting ready for them. So we have a very, very well-equipped content development facility, and that content development facility is able to give us programs that we need. Second, we have partnerships with more than 30 OEMs. OEMs are those people like the Microsoft, Google, AWS, and others. We have partnerships. Therefore, we get a preview of the technologies that their customers will be needing, and therefore we can incorporate them in our programs. The third is the way we are governing the organization. As you would have seen, we have added new independent directors and brought in expertise from outside, especially in areas like artificial intelligence, or how do you handle consumer markets with this whole digital acquisition route that is happening. So I think all these are contributing to the fact, in addition to the expertise that you need in new sectors.
Right. So overall, let me ask you one thing. Now, really from a revenue share perspective, technology is the maximum where NIIT gets its revenues from. It's almost a little over 75%. The remaining 23% comes in from BFSI as well as the other segments. Now, when you're talking about the new jobs, how big an uptick are you expecting in the near term? And by when do you see it substantially contributing to NIIT's revenues?
Yeah. So as you can see, just one sector is contributing nearly 1/4 of our revenue as we speak, even now. If we get into multiple sectors, we do believe that in the next 3 to 5 years, more than a third to half of our revenue will come from sectors which are beyond technology. However, technology will continue to play an important role in every sector. So that will remain a common mode.
Right. And overall, what's the strategy in terms of growth from here on? Because I was just looking at the balance sheet. NIIT holds nearly little over 700 crores in terms of cash reserves, right? So what is that fund utilization plan from a strategy perspective to achieve hyperscale and growth?
Yeah. So that's a very important part, and thanks for asking that question. Very good question. So we have this fund specifically blocked just to see that we are able to make both organic as well as inorganic investments. Right now, the business at the size at which it is in an investment cycle phase. So it requires funds to be invested, and we are investing in organic as well as inorganic. You would recall 2 years ago, we acquired a company called RPS Consulting, and that has become a very, very important element of our strategy. So whenever we look at new areas, we first see whether it's a buy versus make decision. It is whether we are entering into a new sector, a new segment of customer segment that we are addressing, or a new technology area that we are addressing, or a new methodology which is getting used. So we consider each of these and then decide whether it is better to partner with somebody, whether it is to get into an acquisition, a more deeper relationship, or should we do it on our own. So that's a continuous exercise, and that continues to happen the way it is happening.
Right. So say if you have to look at the next 2 to 3 years, I mean, FY 27-28, where we've spoken earlier, where you've set an ambitious target of achieving 1,200 crores in terms of revenues. And if we have to see that from the current profile of the kind of revenues, I think on an average, it's in that range of 350 to 400 odd crores, right? So we are talking of almost 3 to 4 times the kind of growth in terms of revenue. Now, how much of it is going to come in through organic growth, and how much of it do you think will come in through inorganic growth?
Yeah. So there are multiple forces at work. So let me give you some flavor of that. So first of all, we are aiming for a 3 times more, 3x or 3.35, 3x growth if you speak from here to 5 years from now, or 4 years from now. When we look at that growth rate, the 2 important parts which have to be seen is there are new sectors, there are new segments, and there are new methodologies that we are using. We do believe that given our current run rate, and by the way, if you looked at it 1 year ago, or not 1 year ago, just 2-3 quarters ago, we were far in excess of the growth rate that we required to be achieved. We hit this short air pocket. I believe it's a short air pocket when there was an excessive hiring that the industry did, and now they are balancing that. We will be back on that track, I'm sure, not so far away in the future. On the other hand, the raw material that the raw manpower that, as I explained to you through gross enrollment ratio and graduating, all those guys need to be get into jobs. So therefore, there is no doubt that there is an enormous need. Question is, how do we position ourselves? We do believe that about 75 to 80% of what we are looking for to come from from here to 1200 journey, we would be able to organize through organic means and the capabilities that we have. And we do believe that a part of that may also come, the balance part may come through inorganic measures. But that will depend on whom do we partner with and at what time and how do we go about that activity. But the fact that this opportunity exists, the fact that we have to gear up for doing that, the fact that we have a strong balance sheet and a strong track record, and we are a trusted brand in every home of the country, I think those give us confidence that it should be possible for us to do that.
Right. So, Vijay, one thing now, taking the way the first half was, I think everyone was expecting the second half of the year to actually see a sharp, steep, and weak second half, right? It seems the tables have turned from what we are talking about. Taking that into consideration, would it be right to say that the company can end FY24 at a positive EBITDA because the first half was weak, but that's the turnaround that the company is looking at?
Yes, that's how we have guided also, that we will for the year be in positive EBITDA region, though the growth will not be at the rate at which it is required for us to achieve the 1200. But then as a quarter-on-quarter sequential growth is improving. We had a very small, modest growth in the first quarter. I think second quarter, third quarter, fourth quarter, the better part of the year, I think the growth rate should improve as we go on.
Right. And apart from that, clearly there have been a couple of factors that you've highlighted where the company is targeting the tier 2 and tier 3 GSI kind of customers. What's going to be the strategy there? Is it going to be low volumes, higher margins, or how is it? Because at least that is something that could help to cover up the pain from weak hiring.
Yeah, so we already have a large volume. See, like last year, the fresh hires that the industry did, 19% of those fresh hires were trained by NIIT. Last year, I'm talking about last year. So we have a substantial market share in training the early career seekers, right? And obviously, when we deal with smaller companies, they are not small by any stretch of imagination. They are very large, but the point is they are not the top 4 or 5. That's all. And obviously, it's a competitive marketplace. We do expect that we have a slight edge in margins there and how we organize ourselves. So going forward, I think all those are benefiting. The other element which I should have mentioned is global capability centers or global competence centers, which the many organizations, you know that we have a large number of them, 3,000 or more in the country. In that case, those global competence centers, I think, offer great opportunities. Again, their volumes are small, their needs are very specific, they need specialization. We have all that. We have that whole repertoire available to us. So that also becomes a very attractive opportunity.
Right. And with regards to the mandate that NIIT has received for almost, I think, 100 odd crores from a private sector bank, what's the monetization plan? How much of it will be recognized in FY24?
Yeah, but I think we are discussing about a mandate which is not in hundreds of crores, but I think it is in a number of crores. Let's put it that way, right? And that's a large requirement, and obviously we are at it, and a substantial part will also get done, and that's also contributing to the volume increase that we are noticing right now.
Right. So very lastly, Vijay, 1,200 crores in the next 5 years. what's the aim in terms of the immediate milestone?
You'll have to wait for a few days till we announce our results. We are in a silent period. It will be inappropriate for me to comment on that.
Absolutely. Absolutely. We'll wait for it as well. And looking forward
Thank you for your
to a
understanding.
great success as well. Thank you so much for speaking to us at BQ Prime. Hope you enjoyed the conversation as well, and speak to you soon again. Stay safe.
Thank you very much. Bye-bye.